Hi everybody, welcome to this Wall Street News. US Producer Price Index rose 0.6% in February, higher than market expectations 0.3%. US retail sales increased 0.6% in February, lower than market forecasts 0.8%. U.S. weekly jobless claims declined to 209,000 last week, compared with 218,000 expected. GDPNow estimates U.S. real GDP growth at 2.3% for the first quarter. WTI crude futures rise to $81 per barrel. 10-year Treasury yield jumps to 4.28% after the harder-than-expected PPI report. S&P 500 lost 0.29% Thursday as interest rates rise. According to Bureau of Labor Statistics, the headline Producer Price Index rose 0.6% month-over-month, compared with market expectations of a 0.3% increase. The headline PPI increased 1.6% year-over-year, higher than market estimates of a 1.1% gain. The BRS said, quote, "In February, nearly two-thirds of the rise in final demand prices can be traced to the index for final demand goods, which advanced 1.2%, end quote. According to U.S. Census Bureau, U.S. retail sales rose 0.6%, below expectations of a 0.8% increase. January's retail sales were revised from a 0.8% decrease to a 1.1% decline, revised even lower. In the week ending March 9th, the number of Americans claiming unemployment benefits declined to 209,000, below expectations of 218,000 according to U.S. Department of Labor. Continuing jobless claims rose to 1,811,000 last week, compared to market estimates of 1.9 million. Atlanta Fed GDPNow estimates first quarter U.S. real GDP growth at 2.3% on March 14th, down from 2.5% on March 7th, based on jobs report on last Friday and U.S. retail sales released on Thursday. WTI crude futures rise to $81 per barrel on decline in U.S. crude inventories and an improved outlook for global oil demand this year, as well as an ongoing geopolitical issue between Ukraine and Russia. According to EIA, U.S. Energy Information Administration, U.S. crude inventories decreased by 1.5 million barrels last week, compared to expectations of a 1.3 million barrel increase. IEA, the International Energy Agency, revised up its forecast for 2024 global oil demand to 1.3 million barrels per day. In addition, oil prices were boosted by Ukrainian drone attacks on Russian refineries this week. 10-year Treasury yield jumped to 4.28% after the harder-than-expected PPI report. The rate bottomed out after the jobs report on last Friday, then it jumped after the harder-than-expected CPI report on Tuesday. It became higher with oil prices rising on Wednesday, then it jumped again after the PPI report on Thursday. If you look at the chart for the past 3 months, you can see a resistance at around 4.3% of a 10-year Treasury yield. So what's the next? Will it break the resistance and raise fears on financial markets? Or will it come down without too much trouble? I'm gonna keep you updated on what's going on with the interest rate. S&P 500 lost 0.29% Thursday as interest rates rise. Dow declined 0.35%. Nasdaq also slipped 0.3%. This is end of today's news. Thank you for watching. Have a great day.